So welcome again to this particular session. And in the last one, actually, when we learned the principles of preparation of consolidated financial statement, I wrote this demo, correct? Just pay attention again towards this demo because I am going to use it again and for some further clarifications. Balance sheet of P Limited and its subsidiary S Limited as the 31st of 3/23 is given. This is the same question which we picked up in the last session. Just let me position out. And in that question which we did in the last session, property, plant and equipment was 10 lakh, 5 lakh, and investment of P Limited in subsidiary was 3,000 shares. And current asset were 6 lakh and 9 lakh. Besides that, equity was 10 lakh, one share is of 100. And equity of subsidiary was 5 lakh, other equity was 3 lakh, and besides that, liabilities as far as is concerned, liabilities were 4 lakh and non-current liability 4 lakh and 2 lakh, current liability 5 lakh and 4 lakh. And some additional information was given, correct? So I'm keeping the same data, but I'm changing the additional information, correct? The data is same and I'm changing the additional information. So, same data as in previous demo, because it was a demonstration problem. In previous demonstration, an additional information now is, I'm changing the additional information now. Additional information. Additional information is that P Limited acquired control on 30th of September 2022, and further you are given balance in other equity of S Limited on 1/4/2022 is rupees 1 lakh. Almost same question, except the fact that this time control is acquired midway in the accounting year. So what happens when control is acquired not in the beginning of the year but somewhere in midway in the accounting year, correct? So we will solve the entire question so that you understand all the steps once again very clearly. If you remember, our first step is analysis of accounting period. So that is exactly what I am going to do. Analysis of accounting period. Analysis of accounting period of S Limited. Analysis of accounting period of S Limited. In order to analyze this, what I am going to do, I'm going to stretch a line. It is as simple as that. We will take both the ends of the accounting period. Cautiously note down the closing date, 31/3/2023. It is vital. And opening date is 1/4/2022. Without an iota of doubt, our accounting period starts on this date and current accounting period starts on this date and ends on this date. This is our accounting period, range of accounting period. However, control is acquired on 30th of September. 30th of September 2022, this time this is the date of control. Date of acquisition, because you will acquire control only when you will acquire the shares. So this is your date of acquisition or date of control. Once you have noted down the date of control, your next step is to divide the current accounting period. Your current accounting period is this one, into pre and post period. So in this case, we may say that first 6 months of the accounting period are pre-acquisition period. From 1/4/2022 till 30th of September. This period is pre-acquisition period. This is pre-acquisition period. and post-acquisition period is 30th 9 2022 onwards till 31st of 3 2023. So that means entire accounting period is not post-acquisition period this time. First 6 months are pre and later 6 months are post-acquisition period. Correct? Now we move over to the second step. Under the second step, I am going to compute degree of control. Degree of control. In order to compute the degree of control, what I am supposed to do? In order to compute the degree of control, just pay attention. In order to compute the degree of control, we will have to note down number of shares of subsidiary company, number of shares of subsidiary company. Total share capital of subsidiary company given to us is 5 lakh. One share is of 100 each. So number of share is 5,000. Correct? Out of this 5,000 held by P Limited, 3,000 shares. And shares which are not held by us, that is held by other shareholders, other shareholders, and other shareholders are known as non-controlling interest holder, that is non-controlling interest, 2,000. So as far as ratio is concerned, we may say that 3/5 of net assets of subsidiary company belong to us and 2/5 of net assets of subsidiary company belong to NCI. Correct? These are simple normal steps. Now the next step, as I told you, is to do the analysis of other equity, and this step will acquire significance as we will move on. So the step number C or step number 3, whatever it is, analysis of other equity. Other equity means reserve and surplus of subsidiary company of S Limited. Now as far as other equity is concerned, see here, this is your closing date, 31st 3 2023, correct? And this is your opening date, 1/4/2022. We have written and we have seen earlier that closing balance as far as other equity of subsidiary company was concerned 3 lakh. And in the additional information, it is given balance in the beginning is 1 lakh. I need not require to tell you time and again that this balance was acquired last year itself. Correct? Now, that means in the current accounting period, subsidiary company must have earned 2 lakh worth of other equity. However, subsidiary company earned 2 lakh from 1/4/2022 till 31st of 2023, but this time, because accounting period is divided into post period and pre-acquisition period, out of this 2 lakh which subsidiary company earned in the current accounting period, we may say in the first 6 months, subsidiary company must have earned 2 lakh into 6/12. Out of this 2 lakh, rupees 1 lakh must have been earned in the first 6 months, correct? While in the post period, 2 lakh into 6 months. So unlike the previous question, when control was acquired in the beginning, entire profits which subsidiary company earned during the year were categorized as post-acquisition period. In this case, control was acquired midway or somewhere in between the accounting year. So in that case, during the year profits will have to be, whenever I will say during the year profit, it means profit in the current period. current year's profit will be divided or shall have to be bifurcated between what we call pre and post acquisition period. So in the first 6 months, subsidiary company must have earned 1 lakh, and in the later 6 months, subsidiary company must have earned 1 lakh. And obviously, the opening balance was already earned in the pre-acquisition period, correct? Because it was earned last year itself. So this is very important classification. And after this classification, the next step is also very vital: analysis table. In the analysis table, I will write here P Limited and NCI. Don't write subsidiary. 3/5, 2/5. Basic purpose of analysis table is to know how much was the equity on the date of acquisition, because that amount we need to compute the amount of goodwill. So first of all, as I told you even in the last class, what will be the amount of share capital of subsidiary company, share capital of S Limited on the date of acquisition? Date of acquisition is 30th of September. Logically, share capital of subsidiary company will always be given to you as per the balance sheet date, because balance sheet will be given to you. So that means the share capital of subsidiary company at the end of the accounting year, that is 31st of 2023, is given to us as 5 lakh. But we can easily say that whatever balance was there in the share capital of subsidiary company at the end of the year must have been also be the same balance on the date of acquisition, because share capital hardly changes ever. So on the date of acquisition, we can safely say that subsidiary company must be having share capital of 5 lakh. Regarding share capital, you need not require to worry. Now, what was the balance in the other equity? Because we are interested in computing the equity. Equity means share capital plus other equity. We are interested in computing equity balance on the date of acquisition. So other equity on the date of acquisition. This time you will have to be careful. See here, in order to know what was the other equity means reserve and surplus. Other equity on the date of acquisition. We know that opening balance is 1 lakh. In the beginning of the accounting year, other equity balance was 1 lakh. Now I am going to add here pre-acquisition other equity. Why I am going to add here? Because in the first 6 months, subsidiary company earned a pre-acquisition equity of 1 lakh. So logically it means on the date of acquisition, other equity was 2 lakh. This is the point. Is it clear to you? On the date of acquisition, balance in other equity must be 2 lakh. Opening balance 1 lakh besides what they earned till the date of acquisition. Till the date of acquisition, they earned 1 lakh. And 1 lakh was opening balance. So that means total balance in other equity on the date of acquisition is 2 lakh. So now we can say that 7 lakh is the total balance. 7 lakh is the total equity on the date of acquisition. So on the date of acquisition, total equity balance is 7 lakh. Now if I divide 7 lakh, fortunately I am having the calculator. 7 lakh divided by 5 into 2 will be 2,80,000. So share of NCI in the other equity on the date of acquisition is 2,80,000. Correct? 2,80,000 minus 7 lakh. So 4,20,000, that means 3/5 of 7 lakh. 4,20,000 will become share of parent in the equity on the date of acquisition. In the equity on the date of acquisition. That is very important. Is it clear to you or not? And besides that, when you prepare the analysis table, it is always better to write post-acquisition equity. Post-acquisition equity. As we have seen, this time in the post-acquisition period, subsidiary company has earned only 1 lakh, because post-acquisition period is second half of the accounting year. And post-acquisition equity is 1 lakh. So out of this 1 lakh, 3/5, 60,000 belong to us and 40,000 belong to NCI. Is it clear to you? Very simple now. So now you will acquire proficiency without an iota of doubt. After this analysis table, we have to now find out goodwill. Now I will write here goodwill. Calculation of goodwill or gain on bargain purchase. Gain on bargain purchase. For the same, we write equity, and equity means net assets only. Equity or net assets of S Limited on the date of acquisition. And through the table, we have already computed that on the date of acquisition, balance in equity or net assets of subsidiary company were 7 lakh. Out of that, we are going to subtract NCI share. NCI share. Out of this NCI share we have computed is equal to 2,80,000. So whatever remaining is there, remaining will be equal to 4,20,000. This 4,20,000 signifies share of parent, share of P in the net assets, correct? Share of P in the net assets or in the equity of subsidiary company on the date of acquisition. Now we are going to compare it with the consideration. Consideration. Consideration means your cost of investment, the amount which you pay to acquire the control. Consideration, that is cost of investments. Your cost of investment is 10 lakhs. Cost of investment is 10 lakh. So this time, as you can see, again your amount of consideration is higher in comparison to share of parent's net assets. So again there will be goodwill, and most of the time we shall have goodwill only. So amount of goodwill will be 5,80,000. Very simple, correct? And now next step is NCI. NCI, when I say it means NCI on the reporting date. NCI on the reporting date. So what is the amount of NCI? That means at the end of the accounting year, how many worth of assets belong to NCI? It means, so NCI on the date of acquisition, we have already computed that on the date of acquisition, NCI is equal to 2,80,000. That means on the date of acquisition, NCI has right of 2,80,000 worth of net assets. And now we will add here share of NCI, share of NCI in post acquisition other equity. Now post acquisition other equity was 1 lakh as we just saw. Out of 1 lakh, 60,000 belong to us, 40,000 belong to NCI. So at the end of the year, NCI balance is 3,20,000. You can also straight away compute NCI on the reporting date because closing items are given to you. So you can simply take total of closing asset, deduct total liability from there on. You can get the net assets at the end of the year and multiply it with NCI share. That is 2/5. You can straight away get 3,20,000. Now, next step is consolidated financial statement. Consolidated financial statement. Consolidated financial statements. When we will prepare consolidated financial statement, that is consolidated balance sheet here it means. So first of all I will write as we wrote earlier, assets. 1. Non-current asset. property, plant and equipment. Now, as far as property, plant and equipment is concerned, if you remember actually when we did the last question, correct? The data is almost same. Data is almost same. So our assets were 10 lakh. Our property, plant and equipment was 10 lakh. And 5 lakh was property, plant and equipment of subsidiary companies. So total I am going to present here as 15 lakhs. Correct? I also told you financial asset, and you need not require to mention it. Financial asset, that is investments, will not be presented in the consolidated balance sheet because it is already used to compute the goodwill. Then you must not forget to write goodwill. Goodwill. As per your step number 5, you computed the amount of goodwill as 5,80,000. And then we are going to write here current assets. As far as current asset is concerned, ours are 6 lakhs and 9 lakh is of subsidiary, 15 lakh. So 30 lakh plus 5 lakh 80, 35 lakh 80,000 will become total of your asset side. Is it clear to you? Total of your asset side. Now we will prepare equity and liability side. Equity and liability side. As far as equity and liability is concerned, first of all, you will write equity. Under equity, you are going to write a share capital. Share capital of parent only will find place because share capital of subsidiary company is already used when we computed other equity on the date of acquisition. Correct? Now, we will write here other equity. Other equity. Although from next time I will write, instead of other equity, I will write consolidated other equity. Correct? Anyway, these are initial questions, so still I am writing other equity. Here we write, first of all, the closing balance of parent. And we know that closing balance of parent is actually 7 lakh as far as equity balance is concerned, as per balance sheet. Then we look into the post-acquisition equity and we find our share over it. So parent share, P's share in post-acquisition equity, So subsidiary company earned in the post-acquisition period 1 lakh, and out of 1 lakh 60,000 were 60,000 worth of other equity will belong to us. So 7 lakh 60,000. 7 lakh 60,000. Then I told you earlier that NCI you should not forget to write here as per your step number 6. As per your step number 6, balance which we computed was 3,20,000. Then you have to write here liabilities. As far as liabilities are concerned, first of all, non-current liabilities. Non-current liabilities, ours was 4 lakh and our subsidiary companies was 2 lakhs. So we will write here 6 lakhs. Then we will write here current liability. Current liability is 5 lakh plus 4 lakh. Total will be equal to 9 lakh. Correct? 20 lakh, 20 plus 15, 35 lakh plus 60 plus 20. So 35 lakh, 80,000 will be your total. So this is how I sincerely hope now things would have become much more clearer to you. However, when we will meet you in the upcoming session, correct? In the upcoming session, we are going to have lots of discussion because it is not an easy chapter. We are trying to make as easy as possible. Because when we'll prepare consolidated balance sheet, we will have to take care of several adjustments. For example, in the upcoming one, we may take adjustments with respect to intercompany debts, correct? That means when we prepare consolidated balance sheet, we will have to take care of such adjustment like intercompany debts. Similarly, in the upcoming sessions, we shall talk about abnormal losses. So how the abnormal losses will affect the calculation of what we call, in fact, analysis of profits. Similarly, sometime it may be given to us that subsidiary company has declared bonus issue, so the treatment of bonus issue. Then treatment of fair value changes in assets or liabilities. Sometime it may be given to us that fair value of so and so asset or liability is so and so of subsidiary company. So how to deal up with that? So these are the issues which we may have to face when we are going to actually prepare consolidated financial statement. Besides that, revaluation, and this is quite a tricky one, revaluation analysis. Sometime you may be given that on the date of acquisition, parent limited revalued so and so item of subsidiary company at so and so figure. So how to deal up with that revaluation analysis? Besides, unrealized profit need to be computed. Unrealized profit means profit which could not be realized. Profit remains unrealized means either parent has sold some goods to subsidiary, or subsidiary company might have sold some goods to P Limited, and out of such sale of goods, some goods are still in stock. So that is the reason on those goods some unrealized profit is there. And how to deal up with that, we are going to actually take that also into account. So you have already seen that so many adjustments are there. Besides that, most significant adjustment is with respect to dividend. Correct? Even the dividend adjustment will be divided into adjustment with respect to proposed dividend and dividend paid by subsidiary company. Dividend paid by subsidiary company. These are vital. And sometime bills discounted. So these are the adjustments. So because there are so many adjustments, so in order to clarify all these adjustments, in the very first section, we might, this is our first section because we have divided the entire chapter into different sections. Our first section will contain full-length questions, and each and every adjustment, we will not simply discuss the adjustment as normally others do. For one adjustment, we will do the entire question so that you understand it better and know the proper repercussions. Correct? This is my firm view because simply theoretical discussion will not be enough. So that is important. So that is the reason in the first section itself, near about 20 questions will be there. Correct? And then we will move over to second section, then third section. In the first section, there are 20 questions, then fourth section, and all in all, there might be actually 15, 16, 17, 18, 19 sections in our notes. Needless to add that we have covered each and every question of the module and also of the past paper, and we have tried to cover up even the RTPs. However, similarly, there will be some tougher problems with request to when actually sale of interest. Sometime parent limited, let us say parent limited has acquired 70% stakes in a particular company and decides to sell 10% stakes. Then how to deal up with such issues? Sometime we may have to prepare separate financial statements and consolidated financial statements. So such problems we will see also. Correct? then there will be some concept based questions also, and then there may be what we call questions on chain holdings also. So all these issues we are going to cover and cover at length. So, and you need not require to bother, and there will be some case study question also. We have kept a separate sections actually. So notes actually are at this moment, let me see whether are lying here or not. I will show you. Yes, fortunately notes are here only. So these are the notes, consolidated financial statement, as you can see now. I hope so. Just let me put it this way. Consolidated, these are the notes, and you can see the length and breadth of these notes. So you will understand, and still I haven't printed all the sheets. I'm talking about only consolidated financial statement. So there are so many issues to cover, and in order to cover each and every bit of the issue, correct, we have to actually do this chapter at great length, and that is why a little bit of patience from both the sides is required. And remember one thing, patience always bears sweet fruits, so you need not require to bother. Yeah, bother regarding what we call anything else, just show patience, so you will be able to acquire supreme command, and then you will be able to actually face any sort of question from this particular chapter. So anyway, on such note, we finish up this particular session, and in the next one, when we'll meet, of course, we are going to stretch our discussion towards these issues as I just mentioned out here. Till then, it's good night.